Hello, I'd like to introduce you to JS Services Application Suite and show how, along with its integrated partners, can support you in attaining peak performance in your trading. The goal of the product suite is to provide you with a strategy solution that improves consistency. We do this by expanding your market state awareness to allow you to leverage your ability to anticipate opportunity and have more conviction in the trades you take. The analytics are fact-based and designed to present a more granular picture of the true technical conditions and its defining structure. This offers context to validate trading opportunities in real time, allowing you to make decisions more intuitively and with more confidence. The trading landscape is dictated by fundamental traders. At one end are the massive funds, who are focused on performance metrics with a short-term outlook of 3 to 6 months, trading once a day against the VWAP. And on the other side are quantitative high-frequency traders that define their trading in milliseconds, dominating the order book with predatory strategies. Technical day traders struggle to find clarity in this dynamic. This clarity and awareness is exactly what JS Services Suite offers. Here's how it works. Most traders' tactics are defined as either fading momentum or trading with momentum. And a subset of each of these is a reversal. So it can be a turning point for a trend reversal, a new breakout, or an exhaustive blowout for a fade or a false breakout. Each of these entry tactics, fade, breakout, and reversal, has a market condition they'll perform best in to varying degrees. A breakout tactic will work best in a trend acceleration condition, a fade in a sideways digestion, a reversal in a trend correction or a non-trend sideways state. A reversal in a bull trend correction is preferred or optimal as it has the potential to be the trigger for a new trend move higher. A reversal in a neutral state is a good opportunity as well. However, the profit potential is limited as the state expectation is more sideways. Classifying tactics in terms of value in specific market conditions provides a context for trade vision and size management. Identifying the market condition or state is the strategy foundation layer for good awareness. Market state is the landscape for the trade session. JS Services has identified 26 unique market states, each with its own set of attributes that define the condition that should be anticipated if the market is going to maintain structure and perform to expectation. A bull trend is defined as a market that's making higher move highs, higher move lows. As long as it continues to do this, we should anticipate that it will continue to perform like a bull trend. If, however, the market does not continue to make higher move highs, higher move lows, and break structure, we should not expect it to perform as a bull trend, as by definition it is not, and is in a transitional market state. Transitional states are more difficult to predict, as it's unclear what state a market is transitioning into. Is it digestive, corrective, or trend reversal? Markets are constantly in transition from one state to the next, but do have specific tells and traits associated with these shifts that can be expected. A bull trend has a positive trending attribute, but when it transitions, it does so in sharp corrections or stagnant sideways trading conditions. This clarity provides context to align tactics and achieve peak performance in your trading. The market state alignment is the price framework that identifies the points where markets will either hold structure of the state or break structure and transition to a new market state. It's here where large funds make decisions and provide edge. The price structure of every market state condition can be defined with 3 price points. One price band made up of a resistance pivot and a support pivot that define a critical range, and one price level that identifies technical sentiment. This sentiment bias will skew the market state expectation as it represents the balance point for the session. So sentiment above the market, for example, signals negative sentiment. If this is true for a bull trend market state, it will skew the positive attribute of this state to a more negative or corrective expectation below this price point. Inherent in this framework is a volatility expectation that identifies the price segments the market is currently trading in, which are presented in a full price map. The price map provides context to the market state expectation. As long as the market is holding structure it should be anticipated that the conditions of the market state will hold true. A break in structure and transitional conditions should be anticipated. In addition, the price map levels represent the alignment of the market state expectation and the price points where large traders look to participate. This offers a clear picture of the middle zones between alignment points, which is where the predatory algos have sway and dominate. By aligning trade signals with price structure, risk can be better defined and the impact of predatory algos reduced. Where a trade signal falls within the landscape of the structure puts context to the value of the opportunity. To be sure, the price map is not dynamic support and resistance, which is porous and has no context to support it. The price map is the structure alignment of the market state and provides insight and the ability to anticipate opportunity. Each market state and structure has a unique strategy theme or play associated with its sentiment bias. Every market that's in a bull trend with sentiment balanced will have the same expectation and the same strategy theme associated with it. The optimal and hedge strategies are defined in a virtual playbook and represent the strategy themes that should be anticipated to occur in the session. This awareness provides trade vision and improves your ability to trade more intuitively. Typically, this vision comes at the end of the trade period, when it's obvious why a market performed as it did during the session. With improved market state awareness, this clarity occurs in real time. Technology advances now allow us to improve that clarity by visually seeing the microstructure of the order book. As the current price comes into macrostructure alignment, the focus shifts to the microstructure. The liquidity data provided by the order book are real-time facts that offer vision to anticipate versus a lagging indicator that by design forces you to react. By viewing the liquidity data within the context of the macrostructure, a clearer picture emerges, enhancing your ability to anticipate the market's next move and optimize your trading. I'm going to quickly go through an example of how to use the JS application suite to identify and anticipate opportunity through improved awareness. Please send any questions or comments to info@jsservices.com and attend one of our informative webinars. The JS Desktop is a strategy-based trading tool that allows you to quickly identify markets whose current conditions complement your trading tactics. The market state expectation is the strategy foundation for the trade period. It's the basis trading tactics will play out on. In this example, the market state is bull trend, which has a positive trending attribute. And as long as the price action holds structure, further gains should be anticipated. The structure of the state is determined by sentiment, which is outlined in the playbook section of the JS Desktop. Sentiment is positive above the R reversal level. So in this example, sentiment is in line with the positive expectation of the market state, as the R level defines the structure low point for the current bull trend. The optimal strategy theme is to buy breaks above the R level and anticipate positive structure to build off an intraday low. The price map identifies the full price framework of the market state and the segment distance the market is trading in. In this example, the market is starting to build positive structure off an intraday low, which is a tell that the optimal strategy theme is playing out. It is at this point that we need to dial into microstructure of the order book to see if the alignment is forecasting a resumption of the bull trend or a break back down to the R level support. To do this, we use microstructure liquidity data tool from Velix Pro, Bookmap. Bookmap and JS Services have no economic relationship, but do value each other's applications as complementary products to provide a complete picture of a market's macro and microstructure. JS Services enhances the clarity of macrostructure by identifying the variance or area of influence around an inflection point, which we define as the alert distance. This is the zone where future price direction will be decided. Through the macrostructure lens, we can see the extremes of the noise, but no insight to what is happening at the moment within the order book. Back in the day, this is why memberships to be a local floor trader were so high, because you are actually part of this process of price discovery, and you could not only see the order flow in the pit, but you could also feel it. That emotional aspect now primarily exists within the confines of your gut, but the vision is back, with the order book liquidity data of Bookmap. What you're looking at is a visual representation of the order book with the bright white bands representing large resting paper and the gray shades lesser size orders which depict liquidity coming in and out of the market. I'm not going to go into too much detail, but will highlight a few features for the purpose of this example. You're welcome to join Bookmap's daily 10 a.m. Central Standard Time Q&A update to learn more. The red and green line represent the VWAP, and one of the many features of Bookmap is its ability to customize the tracking of trade blocks with dots to identify areas of intensity of trade. From a macro structure fact focus, we know the market is in a bull trend. We know the market is starting to build positive intraday structure, and we know that it's in line with the optimal strategy theme. We also know this is happening at a major alignment point, the directional, which is the midpoint of the critical range, and that a breakout can produce a significant advance and ignite a bull trend. So what are the tells the microstructure provides us to anticipate and see what the real opportunity is at the moment? A classic setup is when there's a flurry of intensity of trade in an area and a retest of that area does not produce the same intensity. This is a tell that there might be a shift in momentum. When this is followed by a new price high, it is confirming that this is so, and it's a buying opportunity. In addition, when the market trades through long-term resting paper after this series of events, it's a signal that the move is underway and the buyers are becoming their aggressor. When these facts are presented in the context of the macro structure, the vision of the trade unfolds, along with the conviction to expand the trade's duration. JS Services Application Suite improves your awareness and your ability to make more intuitive decisions. For more information and to request a demo of JS Services or any of our integrated partners, please contact us at info@jsservices.com. Thank you, and we look forward to working with you.